Hello everyone, I'm Mark Zane and welcome to Zane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 27 of the Forex market review. Firstly, I would like to apologise for not sending out a week 26 video. The reason was because we just did not have any necessary reason to put out a video. The markets have been very hectic after the England Brexit. They've exited the European Union, and the markets have just been very erratic. The pound has dropped significantly, and it just hasn't really been any major setups. So I really wanted to allow the market to settle down before jumping in and just trying to trade the trade just for the sake of taking one. There's one thing a lot of people do wrong, and they look for trades. You should never look for a trade. You shouldn't be a duck hunter out there shooting your gun at anything that's flying around hoping to hit something. You want to be a sniper. You wait for the trade to come to you, then you take it. So there was no setups for me, and there very likely won't be any setups this month as well for myself, the way I like to trade. But I do want to point out what's sort of happening in the market and roughly some setups that may occur depending on your trading plan. So why don't we go ahead, jump to the charts and take it from there. Okay, thank you. So firstly, we're going to take a look at the Aussie USD. Now, we're going to start on the weekly time frame, the higher time frame, just to see what's happening with the market. If we look down, first thing we like to look for is this first large AO. So we're going to assume that's the wave 3. So it's done 1, 2 down for 3 and pull back for 4 and coming back for 5. So it's very likely it could be going back lower now, but what we want to do is grab a Fibonacci retracement tool, go from roughly the start of wave 3 to the end. We know it's the end when it's crossed over the zero line, and we want to see pull back. It's got to pull back to at least 38.2%, which it has. But I like to take a trade when it pulls back to 50% and higher. And so if I look left, I can see a resistance area roughly around the 50% mark. So, for me, I'd want to be looking at getting in there. So at this stage, based on the weekly time frame, I wouldn't be taking a trade. I'd also like to see come back, retest this 200 EMA, and then that would be a good resistance area, and it could bounce off and come back lower. Now, very much could do that. This could be the A, B, up for C pattern for the wave 4 pullback, because waves 2 and 4 generally like to see an ABC pullback, but we just don't know at this stage. So what we want to do is drop down a time frame to the daily chart, and just before we do that, I'll jump back. I'll drop this move here, pull back for wave 4 on that line there. So roughly from here, we're pulling back up. So here you have another large AO. So that was wave 3, back for 4. Now if we grab our Fibonacci tool, we'll just go ahead and delete the other Fibonacci retracement one, and you look for the beginning of this. It's roughly somewhere around down here. We want to see it pull back. It's pulled back, as far as I'm concerned, too much. It's entered wave 1 territory. So I probably would assume that this new one here is wave 3, and very likely could be pushing back lower to retest these lows again. So if we want to take that assumption, we can do that as well. We just grab again the beginning to the end of wave 3. So here's 1, up for 2, down for 3, pull back for 4. Again, it's hit the wave 1 territory and technically would confirm as a no trade. So really, it's not giving me any clue on the daily time frame which way it could go. So I'll drop down to the 4-hour chart. Here I can see the first large AO. So that would be 1, 2, 3, down for 4. There's your ABC cycle, and never entered into wave 1 territory. So that's the end of wave 1, down for 2. So it's now pushed back higher for wave 5, and we have divergence with a higher high in price and a lower AO. So that's divergence. So it's very likely we could be pushing back lower now. We've had our wave 1, back for wave 2, could be going for wave 3. So if you're looking to short the market, you would be looking at entering somewhere around these levels here. What I do want to point out on the Aussie USD on the 4-hour chart is what we seem to have a head and shoulders pattern. So here we have the left shoulder. So I'll just go ahead and drop that in for you with LS for left shoulder. We've got the head over here in the middle, put a H for the head, and then we have the right shoulder over here on the right hand side. So if we were to see this neckline break, close back below, we're going to be looking to come down for sure. Here it looks like it could bounce on the 4-hour 200 EMA, so we could find a bit of support here and a push back higher. So at the moment, a head and shoulders pattern happening on the 4-hour chart, and if we look down here, we're starting to see some move back lower. Yeah, it's hard to say. As I mentioned, it's very hard to point out a lot of trades at the moment. They're not really giving a lot of good indicators, and so you're really going to be still taking a guesstimate. But I just pointed out there are head and shoulder patterns forming, and if it all meets, anything meets part of your rules, by means, go ahead and take that one. We'll jump across to the Euro Pound now. Again, starting on the weekly chart, wave 1, wave 2, wave 3. All of this is wave 3 up here because it hasn't come back to the zero line just yet. So until it comes back, this wave 3 hasn't really ended. So if we want to see how high it could, we drop the tool in, drop down the 4-hour chart, and as we can see, we have our pushback high for wave 3, an ABC cycle for wave 4, and now a move back higher for wave 5. I do understand that this is a large AO versus this one now, but we've sort of got to ignore this AO here because this is all the Brexit announcement. You know, once they pulled out of the Brexit, the euro strengthened as the pound weakened. So generally we probably would have seen this pushback higher, but with a lower AO, and gave us some divergence. So we won't class this one as wave 3 on the daily time frame. If we jump down to the 4-hour chart, we're going to see wave 1, down for wave 2, and up for wave 3. So again, we're seeing a pushback higher, roughly around these levels. It started to go back higher. We don't know it's wave 3. It comes all the way back below the zero line. But what we can do is put it roughly at the start. We grab our Fibonacci retracement tool. We go, if we were to assume this is the end and it just started to fall its way back down as this retraced below the zero line, then we would want to see it come back to roughly the 50%. I'd be looking left and seeing horizontal support levels matching up with this DSR indicator, the dynamic support and resistance indicator. It's showing support and resistance around this level. So if it was to pull back and give me an entry around the 61.8, bouncing off the 4-hour 200 EMA and this horizontal area, then yeah, that would be definitely a good indication for me to look for a trade back higher. If we drop down to the 1-hour chart, we can see we have wave 3, back for wave 4, up for wave 5. We do see divergence, so it's very likely we could be pushing back lower as we speak. So we can see some divergence there. Let's see on the 15-minute chart if we can identify anything here. We can see a wave 3, a large AO, so 1, 2, 3, down for 4, up for 5. So it might push a little bit higher before pulling back. So we'll just zoom out a bit more and we'll see if we can find any major support resistance areas. Obviously, if it came all the way up to these levels, roughly around there, we're going to be seeing some major resistance areas as well as one about there. So it's very likely it could push back up into this area just that little bit more. So if you're taking a trade lower based on this divergence and everything, you'd really want it to see it push, you know, back down and then maybe do a bit of a retest, and then look for a move all the way back lower. And you'd probably want to be, putting your stop losses above the highs. So you'd probably be looking around, 150 to 200 pip stop loss, and down to those lows you'll be looking at 450. So you definitely can make it at least 1 to 2 to 1 to 3 risk to reward on this euro pound trade if it does set up. But just take note of these levels here: the 61.8 Fibonacci retracement, the 200 EMA, this horizontal dynamic support resistance areas. So keep all that in mind, because it may struggle around the 50% mark. So if you're taking it short, you're looking for divergence on the lower time frames to look at getting out of your trade. And the last one we're going to have a quick look at is the pound yen. Again, first thing, weekly time frame, pound yen, pretty much all the pounds are short, and we're really looking to see when they can pull back, and that's what I'm waiting for. So if we look at a 1, 2, 3 down for wave 3, we drop our line in there just to see roughly where it could be. And then what we want to do is drop down to the lower time frame just to see if this wave 3 on the weekly chart is ending. So drop down to the daily chart and we can see this large AO here. So that was wave 1, 2, 3, and then having its pull back. I'd have to assume, roughly it came back to zero line around about there. So this is its ABC pullback high for wave 4. We're coming down for wave 5. And as I indicated, wave 5, we see this large AO, but because of all the Brexit announcement, we're going to ignore this large AO. And we assume this one was 3, so we're coming down for 5. So if we put at the start of wave 5, drop down to the 4-hour chart, we can see our wave 1, up for 2, down for 3. Still hasn't come back to zero line, almost came back to zero line. But if you were to drop in your Fibonacci retracement tool around these levels, what you'll see is it didn't come back to the minimum 38.2. So therefore it's still classed as wave 3, this whole movement here. I'll go ahead, drop some indicators in for you. There's start of 1 all the way down to here. This is the end of 1, push back higher for wave 2, and this is just start of wave 3 black lower all the way down. And if we assume this is the end of wave 3 at the moment, we've got to do our wave 4 back. So I'm going to put a question mark there. We don't know that is it until we see that come back above the zero line. We see the stochastic is oversold, so it's very likely we're going to find some support there. And drop down to the 1-hour chart. We can see wave 3 up for 4, down for 5. We see our divergence very similar to the euro pound. So I'm going to guess we're looking at pushback higher, pull out to the weekly time frame. Do I see any support and resistance areas? I do. Exactly roughly where it is, there's roughly one around there. We could separate it a little bit and put one up there, and even drop one up there. So somewhere in this boundary, it's very likely it's going to be pushing back higher. So again, wait till you see the pushback higher, then you see a retest of any support areas, and then a push back. Looking left for support and resistance areas, then go ahead and look at taking the trade, probably risking around 500 pips. And if you got out before these support areas, you can make about 1,000. So you definitely can risk $100 to make $200, and that's a good risk to reward on this trade as well. So thank you for that. That was week 27 of the Forex market review. I hope you enjoyed this session. Again, apologize for no video last week, and see if you got any setups that meet your trading rules this week, and by all means take the trade if it meets the plan. All the best. Take care. Bye bye.